South Africa's formal sector employment dropped by 20,000 jobs over the past year. Kevin Lings is chief economist at Stanlib in the studio with us. Talk about that data from StatsSA. 20,000 doesn't sound like a lot, but the point is it keeps getting worse.
That's right. So I guess we keep hoping to create this magical 500,000 jobs in a year. It's been a long time since we've done that, actually, many years. There were a couple of years where we created that sort of level of jobs. So you go back to before the financial crisis, over a period of 4 years, we created 1.5 million jobs. So we've done something similar to that, but since then, we just haven't seen job growth other than in government. So government has moved up both their salaries as well as the number of people they employ to an all-time record high. And I guess that's been a support, if you like, for the economy post the financial crisis. But since then, private sector, if you go to the financial crisis, private sector lost more or less 1 million jobs and has not employed additional people since.
And one of the graphs in your presentation, there's a category called community. Is that government?
Yeah, that's mostly government. There are a few private sector community entities, but it's overwhelmingly dominated by government. And obviously we don't get a breakdown of that community into what is exactly government, etc. But it's mostly dominated by government. And if you look at where in government they employ people, very much in the provincial departments, massive ramp up in employment. Obviously government now is saying, well, we can't continue to do that. We have to cap salaries, we have to cap the wage bill in general. So they've put in this sort of soft hiring freeze.
Oh, there it is.
So yeah, if you look at that chart, community right at the end, over the last year, that's created more or less.
That's 60,000.
60,000. And then if you look at all the others, that's private sector, if you like. So particularly look at manufacturing, shedding quite a few thousand jobs. But the problem is that every single sector is losing jobs. So you would say that's broad-based decline in private sector employment. It's not a disaster because the numbers are not disastrous. In other words, it doesn't push us into a recession, but it's telling us the private sector is not expanding.
Just to clarify, so is that 20,000 that we mentioned at the beginning a net number?
Yeah, so it's net of all of that.
It's actually worse than we think if you take out government.
It's massively worse than you think if you take out government. Private sector is systematically watching costs and curtailing employment where they can. Obviously, businesses have a difficulty in simply just cutting staff because ultimately you cut into your ability to function. So they're careful about skills, etc. But the message is very clear. Private sector hasn't employed for a number of years. And the only area of employment has been public sector. While that sounds okay for a while, it's simply not affordable because your tax base doesn't grow.
So what now?
You've got to create jobs in the private sector, and there's only one way to create jobs, and that is you have to have private sector investment. So the thing that we're missing in this job environment is that private sector is not investing in itself, it's not expanding. And obviously the reason it doesn't expand is it just doesn't have the confidence. So the answer for South Africa keeps coming back to one single thing, and it will always be the answer, and that is you've got to inspire business confidence.
Kevin, we've got the South African formal sector employment there. And
so that's the total including government, so that's every sector. That blip up in 2014 is when we had the election in May 2014. What happens is the IEC employed a lot of people to man polling stations. So you get a ramp up of over 100,000 jobs when you do that. And then obviously once the election's over, those people lose their jobs. So you see the blip come down. The point with that chart is don't worry about the blip, just look at the trend, and the trend is flatlining, including government. Now we know government's been increasing, which means that if you just stripped out and had a look at private sector, it's net declining over that time. And you can't grow a successful economy without private sector employment. It's just not feasible.
Kevin, back at Stanlib, I know how it works. What your colleagues will do is say, okay, Kevin, now you've looked at this, come and do a presentation in the boardroom with the PowerPoint, whatever. What are the kinds of things you are telling them as the business that they must take out of these latest numbers?
Well, you know, primarily we managing money on behalf of clients, so we have to get the best for our clients. And right now we've got to look at where there is growth. So we look at the South African business and we recognize that there's very little growth in true South African companies, which is very sad, but that's the reality. So when we invest, we're predominantly looking at companies that are earning income outside of South Africa. Fortunately, there are quite a few. And they're very good quality companies, something like a Richemont, South African Breweries, MTN, Naspers, etc.
You're talking about the top 10, 12, the big ones.
Yeah, so the big companies earn a significant portion, and in the JSE in total earns almost 50% of its income outside of South Africa, concentrated in a few. So we focus on those companies and we say, we've got to ultimately chase growth. We can't invest in stagnant companies. We've got to look outside South Africa.
What about government policies and that trying to foster entrepreneurship? We can't depend on the government. So
again,
Jacob Zuma said that. There was commentary out this morning.
So there are lots of policies. If you go to the National Development Plan, it talks very actively about small business development. If you look at the budget, it talks about trying to help small business. But we kind of, the way I would describe it is one step forward, two steps back. In other words, we talk on one level about wanting to do the promotion of small business, but the regulation that we put in place to regulate business just stymies it. So a good example is look at the ease of doing business. So a survey, international survey done every 2 years around the world, it's an independent survey, and it says how easy is it to do business. We rank 67th in the world right now, and every year for the past, I don't know how many years, we've gone backwards in the ranking. In other words, relative to other countries, we're making it more and more difficult to do business. And that impacts small business because they don't have the resources to work through all this regulation. So I would say that while we talk about it, we're not showing that in action. In other words, what are we actively doing? Not talking about it, what are we actively doing to help small business?
So that incoherence again in policy. I remember when I went to Mauritius and they told me the story of a Nigerian delegation that come to visit them and only half of them arrived and they said, where's everyone else? And they said, no, we couldn't get visas. On the spot, Mauritius scrapped visas.
Yeah.
On the spot, that day. They said, okay, no more visas. That's what we need.
You need that sort of thing. So if you go, pick a country. So the country at the top of the list of ease of doing business is New Zealand, having just beaten us.
Yeah, I'm sorry you have to mention that.
Sore subject.
But you can start a business in half a day. So that's at the top end of the scale. And that's how easy they make it to do it. And other countries do it in varying degrees, but if you look at South Africa, it can take you many weeks to work through all the regulation. And what you measure is how many regulations, how many pieces of paper, how many steps are there to just simply starting a business.
The last I heard it was something like 14, where you've got to go to different offices and fill in forms and stand in queues, etc.
That's right. So that's just starting a business. That's not even trying to operate in a particular industry, the regulation of that industry. And quite frankly, you've got to throw in other regulations. Labor legislation is onerous on business, and there are many other controls. And so what happens is business looks at it and says, gee, it's just too much effort. Throw in a bit of electricity outages and business simply says, I'm not investing. It then looks for opportunities because it wants to invest. That's the bizarre thing. Business wants to always invest. So it looks at a Nigeria or it looks at a Kenya and it sees, look, this country is welcoming of business. Let me go there, and it finds that it can do business quite well. And that's the sad thing for South Africa. We're losing that resource to other countries.
Kevin, thanks so much. That was Kevin Lings. He's a chief economist at Stanlib.